Hi everyone. In the last video, we said we are going to look at the long-term capital in detail. And here is the long-term capital, which is the source of finance, which is the major source of finance to a company. Now, these are the long-term source of finance, long-term capital. We have the ordinary shares, we have the preference share, we have the debenture. In the private sector, we call it debenture. Why in the public sector, they call it what? Bond. In the public sector, they call it bond. The public sector, the government, they call it bond. And also, another name for ordinary shares is what? It's called equity. So we'll be using it interchangeably. We are saying, if you hear me say, if you say equity, we are talking about what? Ordinary shares. By this, therefore, these finances provided by the providers of capital. If a company will buy ordinary shares, we buy shares in companies, be it ordinary share, preference share, or debenture of company. The return for ordinary shares is dividend. This dividend is a cost to the company because it's going to pay to the providers of this capital in this category. Also, the return for preference share is dividend. It is also a cost of capital to the company. It is the return to the providers of this preference shareholder, those people that purchase preference shares of the company, the return to them. And debenture interest is their own return as well. The question now is, how do we now determine the cost of the cost of each of these categories of capital? Because the company will not just wake up one day and they just tend to do what? Determine how much is going to pay as dividend, as interest, and stuff like that. It depends on what? On some calculations on the performance of the company per se. So how do we now calculate the cost of capital of each category? So the cost of equity is represented with what? With KE. While the cost of preference shares is represented with what? KP. While the cost of debenture is represented with what? It's KG. KE is calculated as D all over MV, where D is what? Dividend. Where MV is what? Market value. Which dividend are we talking about here? Dividend can come in two forms, majorly two forms. You can have dividend, you can have what? DO, which we define as what? Dividend in year zero. In year zero. Or dividend now. Dividend now. And now. The present dividend. Also, we will also have what? D1, which is what? Dividend in year 1. At this future dividend. But majorly, this is the formula for calculating dividend, for calculating cost of equity. To now depend on the information given in the question, we should now determine whether it is what the dividend you are talking about here is D1 or D0. Dividend year 1 or dividend now. So in our subsequent video, we shall attempt to do what? To explain how do we determine whether we are going to use D1 or D0. But majorly, this one is what is dividend. Whether it's going to be D0 or D1, it tends to know. Also, for KP, for cost of preference share is what? KP is what? Dividend over market value. You have told us that these guys also receive dividend. So in calculating the cost of preference share, call it for D over MV, which is what? Dividend over market value. On debenture holders too, cost of debenture is equal to interest over market value. Under the debenture, he said this set of people receive a fixed rate of interest. So the rate agreed upon when this contract was about to be signed then, is the rate of interest we are talking about there. Multiplied by the interest, so we go to get what the interest. So when we get to calculation aspect, we tend to do what to understand what we are talking about in each of these categories. So therefore, we tend to look at this provider of capital one after the other. We look at the ordinary share. After that, we tend to look at what the preference share. We then look at what the debenture. In order for us to understand in details what we are talking about under what the cost of equity, cost of preference share, and cost of debt. At the end of the day, we will see that this course is an interesting course, so that we're going to enjoy. So watch out for our subsequent video on detailed explanation of ordinary share. At this cost of equity, we are going to do what? Explain it in detail. Because understanding this will help us to do what? To navigate, to explain the concept of what to understand how this cost of equity is being arrived at. So watch out for our subsequent video in which we are going to explain only on what to expatiate only on what on ordinary share cost of equity. Thank you.